This is the Anthem Minute from Anthem Gold Group. Today's headlines were a real-time reminder that stability can't be assumed, and uncertainty doesn't always arrive with a warning label. Markets moved sharply after fresh tariff threats tied to the Greenland dispute rattled investor confidence, and as risk appetite cooled, gold jumped again, pushing to new record territory in futures trading, with reports placing the move around the mid-4700s per ounce. Two other places to watch right now are Iran and Venezuela. Not because anyone can predict what happens next, but because both illustrate how quickly conditions can shift and how those shifts can spill into global markets. In Iran, reports of a wide internet shutdown and ongoing pressure around internal unrest highlight how disruptions can compound uncertainty and strain confidence. And when markets feel uncertainty around energy-producing regions or major geopolitical fault lines, we often see ripple effects. Changes in oil pricing expectations, shifts in currency strength, and an overall risk-on, risk-off mood among investors. In Venezuela, headlines around oil sales proceeds and evolving policy efforts show how access to resources and the rules around investment and trade can change quickly under political stress. Even when the story is fundamentally about oil, the broader lesson many investors take from long-running instability is that relying too heavily on one system, one currency, or one kind of asset can carry its own kind of risk. Now, a quick note. This isn't a prediction, and it's not investment advice. It's context. And context matters because it shapes how investors think about resilience. When people talk about resilience in a portfolio, they're usually talking about a few simple ideas. Diversification, because different assets can respond differently to the same headline. Balance, because markets can move on growth, rates, inflation, or policy surprises. And preparedness, because the goal is often to avoid being forced into decisions when volatility rises. Stocks can be sensitive to earnings, interest rates, and growth expectations. Bonds can be sensitive to rate moves and inflation. And some investors consider precious metals like gold as a way to diversify because they may behave differently in periods of heightened uncertainty, though gold can also be volatile and prices can move quickly in both directions. If you'd like a calm, straightforward overview of how physical precious metals work or how a gold IRA is structured at a high level, Anthem Gold Group can help with education-first guidance. You can request a complimentary education kit or speak with a specialist at 888-444-2948.